Hi, my name is Philip Nybert, President of Mortgage Lenders of America. This is the first of what we hope will be many emails that we will send out to you with videos attached that provide current, up-to-the-date information about issues that are important to people who are buying or refinancing their home loans. Today's topic deals with the recently extended or the new tax credit that was just signed into law a couple days ago. What the new tax law does is provides tax benefits or tax credits to two categories of people. The first is a first-time home buyer, and the second would be people who are moving up and buying a subsequent home, people who currently own a home. First off, let's talk a little bit about what a tax credit is. A tax credit often gets mixed up with a deduction, and they're completely different. A tax credit is truly money that is owed to the home buyer and paid to the home buyer when you file your tax returns on or about April 15th. In that situation, you would file your tax returns and you would attach your tax credit to that. So for example, let's say you file your tax return and you're supposed to get a $500 refund from the government. When you attach that to it, you'd actually get a refund not only for the $500, but you'd get an additional, for first-time home buyer, for example, $8,000 tax credit for $8,500 total. If you owe taxes, you apply your credit to that also. So let's say you file your taxes and you owe $1,000 and you're that same first-time home buyer scheduled to get an $8,000 credit, then you would actually get a $7,000 refund from the government. So that's a little bit about what a tax credit is. Now let's get into the specifics about who qualifies for these programs. The first one is first-time home buyers. And first-time home buyers are defined as anybody who has not owned a home within the previous 3 years. And you're entitled to get a tax credit for either 10% of the purchase price of your home or $8,000, up to $8,000. And again, it's a real simple tax credit. There are some limitations, but the limitations are pretty high. So for example, the maximum loan amount that you can qualify, or purchase price that you qualify for, is about $800,000, pretty high up there. Most people seem to qualify. Now the interesting new addition to this is for move-up buyers. And the law takes into account and says anyone who has lived in a home or owned a home for 5 of the previous 8 years would qualify for the move-up tax credit. And the move-up tax credit is $6,500. And that again is paid the same way when you file your tax return at the end of the year. Other things you can do would be to adjust your withholdings. If it's early in the year and you don't want to wait till the April 15th of the following year to file your taxes, you're able to adjust your withholdings so that less is coming out of your check, or you can file, I believe, an amended return for the previous year. So anyway, I hope that gives you some basic information in regard to this. There's additional information available that should answer most questions. Please contact the loan officer listed on this email if you'd like more information. And finally, the first step to any purchase of a home really is getting pre-approved. Contact the loan officer and we're more than happy to help you get pre-approved to start the process. Thank you, and I hope you have a great day.